Hello, everyone. Welcome to NYU Grad's Daily Grind. This is the maiden voyage of the Daily Micro Podcast. I want to welcome everyone that already follows me, as well as anyone who would discover this mini podcast through one of the platforms. And I hope everyone had a wonderful July 4th weekend. Um, we are broadcasting live and recording July 5th after market hours, and hope you and your families had a wonderful holiday. So, since this is the first inaugural podcast, I wanted to actually explain what we'll cover. So, this mini podcast is going to be snackable, under 15 minutes. Today might be a little bit longer since it's the first one, and basically, my goal is to kind of go through the forest and the trees of the macro financial markets and kind of give, what's sticking out to me, what looks strong, what looks weak, and what to watch out for in the coming days. And I do want to preface that it's the summer months, and right now, there's probably about 7 companies in the S&P 500 that are holding up the world. One example is Apple, everyone's favorite ETF company. But just kind of looking at today and what I saw, what kind of stuck out to me? Um, we're seeing this pattern every day where the opening bell at 9:30 signifies the low of the day, between the opening bell to probably 10 a.m. Eastern. And once that low is made, the prices of most of the S&P 7 leading horsemen start to rise and taking the markets up with it. That was no different today. We closed off the lows across all indices. When you take a look at kind of the breadth uh, of the markets, which I posted quite a bit on uh, this topic, something that you should all be following on a daily basis, because if you track it every day, you start to get a real sense and pulse of where the money is moving. It's kind of like the breathing. I know it's called breath with a D, but it kind of shows where the money is flowing and if there's an imbalance. So, taking a look at today's picture, we had roughly about uh, it was 69% shares declining. So there were over 5,000 stock issuances that were declining today and about 2,300 advancing. So the sellers were winning. I really like to look at the new highs and new lows. But when you have such a soft day coming off a holiday where everyone's pretty much still on vacation mode in the office, or remote workers, they're probably not going to be back at their desks till Monday, July 10th. But when you take a look at new highs and new lows, we had 134 new highs today and 85 new lows. So not much action, but this is something that I'll report on every time I do the daily grind. So, kind of moving down the list here, I have some notes. One of the things that really sticks out to me is kind of a dichotomy between the home builder stocks and the 10-year Treasury yields. So you have, in one case, home builders like Toll Brothers, Beazer Homes, um, and the like, who that are making all-time highs. And one of my buddies, Nick Greeley at Reventure Consulting, has been posting quite a bit about this. But we'll kind of, this is just kind of the forest and the trees. So that's one thing that's sticking out. Home builders are still near all-time highs, despite the fact that mortgages, the 30-year mortgage, as well as just the 10-year Treasury, are also looking bullish. Both cannot rally together forever, so one of these two is lying, and the other will start to go the opposite direction. We're just kind of having to wait and see. What's looking really strong? So I'll be honest with you, not too many outside of the 7 horsemen of the S&P 500, but one smaller company that's growing very fast. The chart, you can take a look at it. The company's name is Extreme Networks. The ticker symbol is E as in Echo, X as in X-ray, T as in Tom, R as in radio. So EXTR. This stock is just coming up the right side, and it's coming out initiatively in a very positive move outside of a value zone or an agreement area, which I've also covered in a few of my previous posts on the NYU grad Substack. So when you take a look at what's weak, you kind of it's just sticking out like a sore thumb for me is Pfizer. When you take a look at Pfizer, and if you hear my keyboard, it's just me looking at a chart. So I'm just pulling up Pfizer real quick, doing this live. Yeah, I mean, looking back at the chart here, going back many years, decades, we are sitting right at that trend line. It might hold and start bouncing from here, or if this trend line, long-term trend line breaks, we're going to have some problems. And if you follow me on Twitter, which is NYU grad number one, you will see this chart, and I'll try to post this later on the Substack as well. Going down the list here, what's also looking very weak is Walgreens, the pharmacy chain. This also is just looking like it's hanging off a cliff by its fingernails. It looks very sick. And there's a lot of reports of like even downtown San Francisco, every single Walgreens has shut down because of all the rampant crime and homelessness and drug use, and as well as shoplifting. So that's one to also look at is Walgreens. Another one which is kind of bucking the trend, because if you take a look at gaming or gambling stocks, they're not that bad. They're kind of stuck in this little trading range. But if you look at Penn National Gaming, something is wrong. Like it is underperforming its peers right now. So that's another one to look out for. Penn National Gaming. And then a couple things that are also kind of on my radar that you should probably also take a look at. There's talks about a UPS nationwide strike brewing. It's not confirmed, but if that happens, that's going to delay not only obviously all of our goods, but it may impact the economy short term. Typically these things will resolve themselves, and uh, they will negotiate. But you want to track UPS, FedEx, and just the transportation index in general. Also, look at the semiconductors. That's very important. We really can't sustain a rally unless semiconductors move up and continue to advance, such as NVIDIA, Intel, AMD. And then, obviously keep track of all the large cap S&P 500 and NASDAQ names like Apple, Facebook, sorry, Meta, I keep calling it Facebook, Amazon, NVIDIA, Tesla, and the like. You also want to keep track of financials. Uh, you know, JP Morgan's doing okay, but you also want to keep track of Goldman Sachs, BlackRock, and all the regional banks. And, if you don't want to track some of these mid cap regional bank names that no one's ever heard of, KRE is a good index ETF to follow. And then I'm also watching consumer credit companies, not only just the big names like Capital One, credit cards, American Express, uh, etc. But I'm also watching sort of those buy now, pay later, like Affirm Holdings, AFRM. I'm also watching companies like PayPal, MasterCard, Block, formerly known as Square, and the largest buy now, pay later company. One of them, many of you may have never heard of it. It's called Enova International, ticker symbol E as in Echo, N as in Nancy, V as in Victory, A as in Apple is the ticker, ENVA. So that's kind of a walk through the forest and the trees. I hope you have a great evening or morning, depending when you're listening to this. I will likely publish this on the morning of July 6th as the maiden voyage of NYU grads daily grind. And really appreciate you joining me today. And if you have a friend that you think would benefit from the series, please share. And I'll see you on the Substack. Have a great day.